Hello investors and future investors, welcome to the channel. For today's video, I will be showing you the easiest option strategy if you are new to options or if you have zero knowledge about options trading. I'm also going to show you how to use this simple option strategy in order for you to make consistent income. And by the end of this video, you should be able to implement this strategy in your portfolio with the utmost confidence. So if you are new to options trading, or you're trying to use options to make some additional income to help you to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I will be showing you one of the simplest option strategy if you are new to options in order for you to get started and start making consistent income. For today's video, we're going to be using none other than Big Bear AI. So before I go ahead and get into these option strategies, I want you guys to do yourself two favors. Here's favor number one. Always make sure to do your own due diligence before investing. What may work for my portfolio might not work for your portfolio. Favor number two. Always make sure to have an exit strategy before getting into any options contract. That way, if the trade do decide to go against you, then at least you know how to get out of the trade. Now, let's go ahead and get down and dirty with options because there's only three proven ways in order for you to learn options, and that is to practice, practice, practice. So I will give you a little preface of BBAI in order for us to set the foundation in order for you to help determine the strike prices that you're going to go ahead and choose. And for that, we're going to go into the advanced feature right here in order to open up the chart. So with the chart on BBAI, the current share price is around $6.19. We're going to go to the year outlook, or the year to date rather. And what I'm going to show you the channel that I realized BBAI has been trading. Full disclosure, I do have BBAI in my portfolio and I have been monitoring this stock for a while. So if I were to go down here and draw a line right here, you're going to see that BBAI has a very strong support at around the $5 level. Does the stock go below the $5 level? Several times. Does it come back up? Yes, it does. So the $5 level is going to be the strong support for the bottom of our channel. So I'm going to go to the top now. I'm going to draw another line. Now this line here is what's going to represent a very strong resistance. The resistance here is going to be $7. Also, can the stock go above this $7 resistance line? Yes, it can, and it has several times, but it always comes back to it. So the current channel that BBAI is trading within is going to be between the $7 and the $5 range. That's going to be the groundwork, the foundation for us to go ahead and do this option strategy. Let's go ahead now. We're going to go back to BBAI and we're going to go ahead and start this options. And we're going to go open up our options chain. For those of you that are new to options, in order for you to go ahead and open up the options chain, you're going to go to trade BBAI options down to the bottom here, and that should open up your options chain. This information that we just got on our screen right here is known as the option chain. And what this option chain does is that it gives us enough information in order for us to go ahead and make a very informed decision before getting into any options contract. Now, before I go ahead and give you a step-by-step walkthrough of this option strategy, I want to let you guys know the reason why I have this stock in my portfolio, BBAI, is because I want to capitalize on this stock momentum in the short term. I'm looking to hold this stock in my personal portfolio for at least 2 years. Now, for those of you that are in the channel members, you guys already know why I'm holding this stock for that amount of time. For those of you that want the insider information, you guys should go ahead and join the channel right now. So let's go ahead with this option strategy. We're going to start off by going to sell, then we're going to go to put, and now we're going to be choosing our strike date. The strike date I'll be going with is going to be December 26th, which gives us 31 days to expiration. The reason I'm going to be using this particular strike date is because I want to perform what's known as a monthly expiration date. So December 26th give me the closest expiration date to 30 days. So now we have our sell and we have our put and we have our expiration date of 30 days out. Now I'm going to proceed to choose the strike price. In order for me to choose the first strike price, we will have multiple strike prices for this option strategy. In order for us to go ahead and choose the strike price, we're going to have to go down below the current share price, and I'll be going with the $5 strike price. By now, you guys know exactly why I'm choosing the $5 strike price, because I did illustrate at the beginning of this video that it provides a very strong support. Now, with the $5 price, because this is an income generating option strategy, I'm going to be paid. The amount I'm going to be paid is going to be 0.18 here, or $18. Each option contract does contain 100 shares. So you simply multiply the amount of money you're going to be making, which is 0.18 or 18 cents. You go ahead and multiply that by 100 shares, and that's going to give you $18. This first part of the option strategy is going to be known as the cash secured put. The cash secured put is the first part of this particular option strategy. Now, with the cash secured put, here's what's going to happen. Come expiration date of December 26th, what you want is that you want this share price here to remain above this $5 price here. If that happens, then you're going to get to keep your $18 and you're going to have your collateral released back to you. One of the most important criteria in order for you to do this option strategy is that you will be required to leave a collateral. Hence, the name for this option strategy is going to be the cash secured put. The collateral you're going to need to leave in this case is going to be whatever your strike price is. In this particular instance, it's going to be $5. Once again, we are dealing with options right here. So you're going to multiply your $5 here by 100 shares, and your collateral for this is going to be $500. Now, here's the kicker. You are leaving $500 in order to make $18, but do not look at the monetary value of what you're going to be receiving. Go ahead and look at what I like to call the ROI, or your return on investment. Your return on investment for this investment is going to be a 3.6% return. How did I come up with that? You're going to divide your $500 here by your $18 you receive, and you're going to get 3.6%. A 3.6% in a month is a very extremely lucrative investment. If you go ahead and you compound that 3.6% by 12 months, you're going to see you're going to outpace the S&P 500, which is the benchmark that most people uses. Now, for this option strategy to work, first to go into the second leg, this trade have to go against you. Now, the only way this trade is going to go against you is if expiration date comes along. If this share price right here falls below this $5 strike price here, then you're going to lose your $500, but do not worry. Like I said, this option strategy is going to have you winning no matter what happens. So now that you lost your $500, what's going to happen is that you're going to own 100 shares. The 100 shares you're going to own of BBAI is a win for you. The reason why it's going to be a win for you is because you lost the trade and now you're forced to buy 100 shares at the $5 price. The reason why it's a win for you is that 30 days prior, that particular stock was trading at $6. So if you want to look at it this way, you actually save yourself $100, which is going to be a difference between the $6 price here, the $5 of your cost price, and you multiply that again, once again, by 100. So you're actually going to be saving yourself $100. Here's another thing that makes this a win-win option strategy. Here's another win. If you are assigned, or if this trade do go against you, then what you've actually done is that you actually got these shares that were trading for $6 at a much lesser price. Your new average cost is not going to be the $5 that you paid per share. It's actually going to be closer to your break even right here, which is going to be 4.79. How did I come up with the break even or your new average cost? You're going to take your $5 here, you're going to multiply the premium you received, and that is going to bring down your average cost to 4.79. Now, the reason why it's 4.79, in the real world, it should be 4.82. The reason why it's 4.79 is because there's other factors that goes into it, which is going to be known as the Greeks. The Greeks are all these down here, but we're not going to get into that. We're going to keep this video today extremely simple. So that is part one of this option strategy. Now, the best case scenario for you to do this first part of this option strategy is on a stock or an ETF that you actually want to own in your portfolio. This is actually a cheat code if you want to own stocks in your portfolio for a cheaper price than what is trading at a couple of days before. So, like I mentioned, I do have BBAI in my portfolio and I actually want to own more shares of BBAI. So this option strategy works perfectly for me. Please make sure you do option strategies and also option strategies on stock that you gone ahead and make sure they align with your portfolio. Now, that is part one of this option strategy. Let's go ahead to part two. Before we go ahead to part two, if you guys are getting any value from this video right now, that'll be a perfect opportunity for you to go ahead, like the video, subscribe to the channel. And remember, go ahead to become a member of the channel in order for you to get the exit strategy for this particular strategy. Okay, here goes part two. Part two assumes that you lost the trade. You now own 100 shares of BBAI at a $5 cost price right here. So now that you have 100 shares, I'm going to show you how to continue making consistent income. The consistent income you make on the first half of this option strategy was the $18 you receive. Once you're not assigned, you're going to keep making this $18 until you are assigned. So this $18 is going to be your consistent income. So let's go ahead to sell now. We're going to go to call. And just to keep the video real simple, we got to stick with the exact expiration date because we're still going to be doing monthlies, which is going to be December 26th. Now, obviously, once you are assigned on December 26th, the next strike date you're going to be using to do this next option strategy is going to be 30 days from this date. So now we have sell and we have call. Now we're going to go ahead and choose our strike price. For this new option strategy, we're going to go ahead and choose our strike price above the current share price. And we're going to be going with the $8 price right here. Now, there's a couple of reasons I'm going to be going with the $8 price. Here's the number one reason. The number one reason is that I illustrated the channel within where BBAI is trading, and that was between the $5 and the $7 price. By me going to the $8 price right here, I just want to give myself some additional wiggle room in order for the stock to move. So if the stock were to have a big move right now and it goes to $7, that's fine. I gave myself some additional room. So in order for me to lose this trade, the stock not only have to go past the $7 price that I showed you as the upper channel, it has to go all the way up to $8. Now, if that happens, I'll be making some income, but I'm going to get to that income in just a second. Let's work on the consistent income right now. So with the $8 strike price, I'm going to be paid once again. Remember, I am going to show you how to make consistent income. The amount I'm going to be getting paid is going to be 0.22, or once again, that's going to be $22. Now, in this case, what you're going to go ahead and check again, you're going to check your ROI or your return on investment. So your ROI on this case is going to be 4.4%. The reason why it's going to be 4.4% is because the income you're going to be receiving right now is going to be based off of your average cost. So to keep things simple, we're going to say you got assigned the shares at a $5 price. So you're going to divide the $22 you receive by your $500 that you left for collateral the first time, which is your $5 per share right now, and that should give you 4.4. With this option strategy, known as the covered call option strategy, your rate of return or your ROI is going to be higher than the cash secured put. And the reason for that is that here's a little trick for you. The Chicago Board of Exchange have a higher price for the calls because they're anticipating the share price going up rather than it going down. Hence, the calls are paying a lot more than the puts. So now I'm going to go ahead and show you how to make some extra income known as capital appreciation or investment gains. So once again, this $22 right here is going to be your consistent income. You're going to keep doing this option strategy until you're assigned. Every time you do this option strategy, you will be getting income. It's not going to be exactly $22. It's going to be somewhere about there. Now, in order for you to continue doing this option strategy, what you need to happen is that come expiration date, you need this share price right here to stay below the strike price you chose, which is going to be the $8 price right here. Once that happens, you just keep doing this option strategy again and again and just keep generating consistent income. Now, the other way this trade could go, if come expiration date once again, this share price happened to shoot right up and it shot right up and it went past our $8 strike price, then now we're going to lose our 100 shares. However, that is a win situation for us. Here's why. We're going to lose our 100 shares at $8 per share. $8 multiplied by 100 shares, and that's going to give us $800. So now we're going to have $800 in our portfolio, but we're not going to have the 100 shares. Here is the amount of money you're going to make. The amount of money you're going to make is going to be the difference in your average cost, which we established is going to be $5. The difference between $8 and $5 is going to be $3. Once again, we are dealing with options contract. You're going to multiply your $3 by your 100 shares. That's going to give you $300. So you will be getting your initial capital back, which was the $500 that you paid to acquire 100 shares. Plus, you're going to be getting an additional $300, which is going to be your capital appreciation or your investment gains. Hence, this is a win-win option strategy. Now, this option strategy is perfect if you're trading with a small account or you're new to options. This is a win-win option strategy. The only way you could quite possibly lose with this option strategy is if you were to go ahead and choose the wrong stock. So make sure to do your own due diligence and use this option strategy on stocks you know that you actually want to own your portfolio or that can make you some decent income. Now, this option strategy, where you start off with a cash secured put, you are assigned the shares. Once that happens, you go ahead and you switch to a second option strategy known as the covered call option strategy, where you continue to make consistent income. Whenever you lose the covered call option strategy, you're going to have cash in your portfolio. Then you could go back again and start the cash secured put all over again. This new option strategy, that's the combination of the cash secured put and the covered call option strategy, is going to be known as the wheel option strategy. Like I said at the start of the video, the wheel option strategy is one of the easiest option strategies, especially if you are a beginner or you have no knowledge about options. So for those of you guys that made it to the end of the video, let me know down in the comments below. Is this option strategy as easy as I make it out to be? Let me know down below. Also, if you guys are using any variation of the wheel option strategy, let me know down in the comments below. Now, for those of you who made it to the end of the video, you guys are the real investors and future investors. If you have not already, now will be your second great opportunity for it to go ahead and like the video, subscribe to the channel. The reason why I go ahead and make all these videos and put out so much free content out there is because I'm trying to help as much people as I can to get into options trading. Now, if there's anyone you know out there struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. Together, let's help as many people start generating income from options trading as we possibly can. Now, until the next video, keep pushing your investments.